So probably who should buy it, Paul, is Netflix because they could really use some IP with an entrenched audience base like that Harry Potter franchise, where you know when you make the next one, you're going to put 2 million people in seats to across all of its revenue streams, across all the distribution windows. Probably, unfortunately, I'm very worried with this administration in the White House that the only person that can get regulatory approval is that Ellison family, who's such good friends with Donald Trump. Because as we know, the FCC has to approve. So I think, unfortunately, probably David Ellison and his father funding him is the one that is most likely to be able to get regulatory approval.
So from what we understand, Paramount Skydance wants to buy all of Warner Brothers Discovery with a cash offer, but Warner's is still moving forward with this plan to split the business up into the fast-growing part of it and then the slow legacy assets. Is that what Zaslav wants, to get rid of the whole thing?
Yes, he does. I mean, he wants the biggest payout possible. You saw he just changed his contract today.
Yeah.
He
So it
wants
doesn't
the
matter
biggest
what
payout
form then.
possible. Right. He wants to be sure to get paid for all of his efforts and his negotiating skills. So he wants to get rid of it all. I mean, if they sold, so the press reports are saying that Comcast and Netflix are only going to bid for the studio. That's going to leave the linear TV networks, which we just saw at the Walt Disney Company yesterday, are down like 36% in Ebitda and down 6% in total revenue. So, you know, that is going to be an entity that no public shareholder really wants to buy. I'm not sure there's value other than as a sort of milking it as a cash cow and paying it out in dividends. So it's my point of view that the better overall money, in my opinion, is to sell the whole thing to somebody and not make it the public shareholders' problem.
So, Laura, I'm looking at the stock of Warner Brothers Discovery, $22.80. It's up 115% this year. Where do you think a good takeout price is for this company? Where do you think the Ellisons or whoever may end up paying?
Well, so I think fundamental value here as an ongoing concern is 12, Paul, which is where it traded for like a year. And then somebody leaked the rumor that Ellison was in play and all of Zaslav's stock options vested at 17. Nice. So then you knew 17 was going to be the minimum price because he doesn't get paid unless it hits 17. And then he said there were other bidders in play. You know, my opinion, fundamentally, it's worth less than $22. But if you have three bidders, it is what the market will bear. And you're going to buy these assets forever. It's like a Rembrandt. You take it off the wall, there's only one of them. And if you don't buy it, it's not there next time. So, you know, probably 22 or 23 is what they'll get. I don't think it's worth that, in my opinion.
Okay, so you think regulatory concerns will mean that Paramount Skydance is the only buyer and David Zaslav wants to get paid, but what could trip things up? What could kind of become a factor that we're not considering right now? If it all comes down to price and who's going to approve it, what else could muddy the waters?
Well, I will tell you, every single day we get a generative AI announcement, and that adds risk to everything in media because of all of this creative capabilities that generative AI is bringing to the market. Absolutely, you could see a headline in generative AI that makes it look like these traditional studio companies who, because of their union contracts, are not allowed to use generative AI tools to create because the employees are trying to protect themselves. Makes these companies sort of more dinosaurs, higher cost per content hour, and they're not allowed to use any of these really amazing tools. So I could absolutely see a generative AI headline. The meltdown happening on the linear TV side is happening faster, which is undermining the fundamentals faster. And it's going to take like a year to get regulatory approval no matter who buys it. So I think there are several things that could derail this.
Laura, you know, you came out with a piece on Disney. You just mentioned Disney. They reported yesterday, weak numbers, stock traded down. What do you think the Walt Disney Company should do with the ABC television network?
So we've argued that they should spin off ABC, and specifically that was in reaction to the FCC chairman saying that they wanted to they didn't like something Disney had done, and so they should pull the ABC licenses. And we made the point in that piece that they would take a one-time hit of about $10 billion. And then it wouldn't matter to them at all
by shutting it down.
What's it? By just shutting it down, not even selling it, because that requires FCC approval. But 10 billion out of their 200 billion market cap. My point was that the FCC doesn't threaten Wall Street. They can pull those licenses. Disney can shut it down. It's a one-time write-off of 10 billion out of a $200 billion asset. The broadcast business is just not that important to this entity anymore. And on that point, Paul, experiences here grew 6% and grew the operating income or profit line 35%. So this is really, to invest in the Walt Disney Company today, you must invest it as a sort of theme park company and cruise ship company, because its entertainment assets, which you and I have long followed, Paul, are shrinking. So you can't invest in it as a media company. You have to invest in it as sort of a provider, a collector of data in 360 degrees, virtual and in the physical world, that then can be sold to LLMs. That's an interesting revenue stream for the Walt Disney Company. They are best in class in collecting data on wealthy consumer behavior globally.
So having said all that, and I just want to bring the whole discussion to a close and come full circle. If Paramount Skydance ends up buying Warner Brothers Discovery, it sounds like it's not going to have that much of an impact on a company like Disney, which is not even in the running for buying any of these assets, because Disney's media and entertainment business is really not a key driver anymore.
I would say that in the short term. I mean, we're basically, you can own Disney today for its theme parks and experiences growth, while you're waiting for streaming to get big enough to offset linear TV declines, which are accelerating. And, they need movies is an important engine at Disney, and their movies have, they're going to have an amazing slate next year. So you can wait for movie upside. Like we have another Avatar coming out at the Christmas season, so this year. So that should be good. So you sort of have an option on this awesome movie business they have.
Right.
But meanwhile, you can own it because of experiences or protecting your downside as an investor.